Good day, hello. My name is Michelle Longest, the realtor, better known as Making Moves with Michelle. And I'd like to thank the Dynamite SMMC for allowing me to present my Tax Tips Tuesdays. Just to give you a little bit of information about myself, I am a realtor with eXp Realty. I've been a realtor for a little over 1 year. I also am an enrolled agent, master tax advisor. I've been a tax professional for over 15 years, and I do hold the designation as an enrolled agent. An enrolled agent is someone who can represent you in front of the federal government for your tax matters, and there's only three designations that can do that, and that's a attorney, a CPA, a certified public accountant, and an enrolled agent. So me. Also, I do hold my accounting certificate, and my goal is to place agents in the know of their financial performance at all times. So, what I'll be presenting to you today is the Agent Bookkeeping Spreadsheet, which came to me as a gift from the Randall School of Real Estate by Paul Velashki. And I hope I'm not mispronouncing his last name, but it's the Randall School of Real Estate, Inc. And I would like to regift all of that to you. So if you have not received a copy of the spreadsheet and would like to have one, just make sure you comment spreadsheet in the comments so I can get one over to you, okay? So today we'll be going over the real estate agent spreadsheet. So I want you to grab a piece of pen and paper and get in a place that's the least distracting so that you could take some notes and not be distracted, because I plan on giving you some valuable information. I have my notes because I don't want to miss out giving you guys anything. So today again I'll be covering the agent bookkeeping spreadsheet. Um, and again, it's a spreadsheet that's already created. It's not a spreadsheet that I created. No need to reinvent the wheel. And because I'm not proficient in Excel, this was perfect for me because I didn't have to come up with formulas. Everything is already formulated to calculate for you. You may have to update some figures, maybe one or two, but not too much. So this was something I was able to get without having to go out and hire someone and tailor it to real estate agents, because this spreadsheet is tailored to us as real estate agents. Okay, so the top three features of the spreadsheet that I want to touch on today are going to be your expenses, your income, and the estimated tax feature. Okay, and basically what the spreadsheet is it gives you your total gross income, your total expenses, and your net income. So to me, that sounds like an income statement, which all professionals that own a business need to have. If you go to a lending institution, a bank, a credit union, if you plan on partnering with a thriving business, most likely they're going to ask you for an income statement to see where your business is and how you're performing. So this is a great tool for this. All you have to do is convert that over into income statement format. Maybe, maybe not. You can possibly just give them the spreadsheet and it should speak for itself. But it's great. And in addition to you all keeping the spreadsheet, you do need to keep supporting documentations to reconcile with your spreadsheet. And that consists of bank statements and receipts. So make sure you just, those three things will be a godsend for your tax professional, okay? So we're going to start going over this. And I'm going to start off with like I said, I'm reading from my notes because I don't want to leave anything out. But I'm going to go start off with a lot that it covers. It covers your mileage, your federal taxes owed, your estimated tax payments, but I'm going to start with your state taxes. So as far as the state taxes, I'm talking about your estimated tax payments that you need to be making on a quarterly basis. Remember, we live in the system that the IRS and your state works off is a pay-as-you-go system. It's not a loan. It's not due annually. It is due quarterly, okay? So it figures out your state tax rate. So I wanted to, and what your estimated tax payments were going to be. And I wanted to start off with that one because that may be a figure that you have to go in and change, because we all live in different states. So your state tax rates are going to differ. Some of us don't have any. Sometimes they're higher, sometimes they're lower. Okay, I live in Maryland, so the max my state tax rate would be 5.75 plus my local tax, which is a Baltimore City tax. So every county has a different local tax. So you need to figure out what your local tax is or what your state tax is, and because it's all calculated, reported, and owed on your state tax, just combine that figure and put it on there for what your state tax rate is, okay? So I also check the mileage every month because that can change. It really hasn't changed any for 2021 throughout the months that I've been updating my mileage, but I do check it on a monthly basis just to make sure that my figures are being calculated correctly and that everything is updated. Okay? So, um, my favorite aspect is the estimated taxes. That is my favorite part of the spreadsheet because it shows how much taxes will be owed and when for both the federal and the state. So it's never of any surprise if I owe money. I know what I'm supposed to be setting aside. Okay, it tracks and calculates based on your payments. So if you're putting in payments or you're making payments every quarter or every month or whatever is convenient for you to make sure that they're there by the due date, then that's perfect. It calculates that. It gives you a running tab and it tells you what your balance is going to be at the end of that quarter. Okay? So there's no surprises at tax time. Is no surprises at tax time. Estimated tax payments is a topic with its own segment. I get a lot of questions about that. It's a lot of realtors and business owners that just need to be in the know of how and when they need to be taking care of that tax requirement that we have as business owners. Okay, so you know why you owe and you know how much you owe because it's going to be based off of your income, it's going to be based off of your deductions, and it's going to be all calculated there for you. So you don't have to worry about a little nasty gram coming from your state or federal taxing authority. You'll be ahead of the game. Okay, we don't want those type of problems. You'll be calling me. Okay, so examples of expenses that I track. I track just about all my expenses. I track the broker fees that I pay every month to EXP. I track my marketing materials, the signs that I have to pay for, educational expenses, continuing education. That's all tracked under education, along with any business conferences that I go and attend. If they're outside of the state or they're, not local and I have to fly, I track that flight. If I'm not staying with relatives when I get there, I'm tracking my lodging. I'm tracking meals and entertainment. I'm tracking the cost of the conference itself because most of these conferences that we go to, we have to pay for. We have to pay for this knowledge. So I track that. That's an expense. I track my MLS dues, my association dues, any licenses and permits that I had to pay for. I track those as expenses. Your state and federal registrations fees, if you're set your business up as an entity, I track that. And not all of these expenses are deductible, but I just want to know what I'm spending my money on and how my business is performing, and just in case I have to make any type of adjustments throughout the year. Materials, supplies, equipment, I track that. If I have to buy a new computer, I had to buy this laptop that I'm presenting on. That's an expense, and I use it. I only use this for business. So yes, vehicle repairs. If you are using your vehicle for your business, you need to be tracking those repairs. You need to do those are expenses that this business has accumulated. Okay, so and it's sometimes good to just have a separate vehicle just for your business. So if you can do that, do that. Business trips. I think I just spoke on that. Coaching, any coaching that you receive, you need to be tracking that so you can know how much you're investing in that. And again, I did say meals and entertainment, and I believe, and that's not just meals and entertainment when you're going away for a conference or something. If you're taking your client out for a celebration or in a closing, you need to keep that receipt. If you're having a business meeting with a partner or a colleague, and it's relating to your business, you need to keep that receipt because I believe this year is 100% deductible. So, you need to be able to show that, and like I said, along with your bank statements and receipts, and then you putting on your spreadsheet, you know what you're doing. You know what you're doing with your business. You're a professional. Okay. So let's talk about income. All income is required to be reported. All income is required to be reported. Whether it is from your real estate business, a side hustle, all of that is required to be reported. I'm just talking about real estate, but we'll talk about that. Like I said, all business expenses, regardless if they're deductible or not, track them, because tax law changes all the time, and something that may not have been deductible last year may be deductible this year. Okay. Another thing that I didn't talk about as far as deductibles, your telephone, like your cell phone, your internet, you're using that for your business. Your home office expenses, those are deductible expenses. So don't forget about that, because I see a lot of people forget about those expenses because I guess it's not tangible. But those are expenses. You're paying that cell phone bill that you're conducting business on. You're using the internet that you need in order to run your business. So everything I'm doing just about now is virtual. So those type of tools are required to run my business. So I write them off. Okay. All commissions, back to income. So all commissions from brokers or affiliates, I report with my income. Any type of stocks and dividends that you receive are income. I know EXP gives stocks to their agents. Like I said, I've been in for a little over a year and I have stock built up, but I'm not vested enough to take a distribution. There are some agents that are vested enough to take a distributions of their shares. If they do that and you receive that, you need to report that as income, because it will be reported by EXP or someone, whoever you're receiving your stock shares from. It's going to be reported. And again, you don't want that nasty gram talking about you didn't report some income. You don't want that, and then you'll be calling me to amend your tax return. Okay. So I can only receive commission payments from my broker in my state for real estate transactions. So I enter all of my commissions payments in my spreadsheet. That's also backed by, they do send out like a disbursement, so I count that as a receipt, and it goes into my bank account. So all three of those can be reconciled right there together, no problem. Okay. Um, Also, any commission that comes from affiliate partners. So a lot of us may have affiliate partners like mortgage companies, credit repair companies. What else is there? Property management companies, where we get kickbacks or a commission for or sending them a referral. So you might get $50, 7 times a year for a paid referral that you sent them. You need to report that as income, because that's income as well. If you offer any services related to real estate, like consulting or property management, and you receive funds from that, that's income. You need to put that in your spreadsheet. You charge someone $75 for 30 minutes for a consultation. They paid you, and that's income that you receive. So you need to report that, no matter, and it may have been in cash. So I suggest you take that cash to the bank and you provide your client with a receipt so that you have a paper trail. Okay? Because most of the time, I'm going to tell you all, just from being an IRS employee and working in exams, a lot of Schedule C, a lot of small businesses get audited. And the best way to prove everything that you're putting on your tax return are to have the three things that I'm stressing to you. Okay? The spreadsheet is one of them. So if you have other side businesses or other businesses, I don't want to keep saying side businesses, but if you have multiple businesses, you may want to keep a separate spreadsheet for each business. You may want to keep a separate bank account for each business. You might want to separate those things so they're not commingling the funds, which will be in the business entity segment that I have, and another segment that we'll talk about. Okay, so you don't just have to use the spreadsheet for real estate. It is tailored for real estate, but you can use it in any business. Okay, you may want to do a separate spreadsheet as well, because each business will have their own Schedule C. If it's a sole prop or a disregarded entity, it's going to be, each business will have their own Schedule C. If you have multiple corporations, or a corporation and LLC, they're going to be two different. There's going to be 1120, and then there's going to be the Schedule C. If it's a partnership, you're going to have if another business is a partnership, or you have two businesses that are a partnership, those businesses will get separate 1065 returns to file. So every business will have their own tax return. That's why I say it's important to separate the two, because if everything is all in one spreadsheet and commingled together, then during tax time, your accountant, your CPA, your enrolled agent, your tax professional, it then is going to have to go in and separate out what income belongs to what business, and you're going to get charged for that. So just have it ready, so it's better for you. Your tax prep, it's an expense. Your tax preparation is an expense. Okay, so, and that can get kind of expensive depending on how many businesses you have, or what type of business you have, how many partners you have. That can get it can get a little detailed, especially as our businesses grow. So I just want you to keep that in mind. Okay, so Tax Tip Tuesday is segments that I'm going to have every Tuesday, just to help you avoid getting those nasty grams from the IRS. Okay, so this is a 6-part series, and we're going to go live on November 16th at 7 p.m. So that'll give you time to review the spreadsheet and receive it. Again, if you haven't received it and you want the spreadsheet, make sure you comment spreadsheet in the comments. And on the 16th, we're going to meet back live at 7 p.m. and we're going to have a live Q&A and a mastermind. So bring your other tax professionals, invite your other real estate agents, so we could just share knowledge. People could get information. It's needed. I get a lot of questions about it. So yeah, so that's what's going to happen. And I'm just making sure I'm not forgetting anything for you guys. I just want you all to get the most information that you need. So if you need me to review some information, get your stuff in order, comment on audit in the comments, and I'll get back with you in regards to that. If you're in collections and you're trying to get out, and you're trying to get on a payment arrangement, or do an offer and compromise, or currently not collectible, if you're in collections, because I specialize in collections, comment collections in the comment section. If you just want to have a consultation, like a 15-minute consultation, comment consultation in the comments. So just let me know what your needs are. I'm here for your Tax Tip Tuesdays. I just want to keep all of us out of tax jail, have no problems, and learn how to grow our businesses and not let anything hinder that. Again, I thank SMMC Dynamite for allowing me this platform to share this information, and I will see you all next week live at 7 p.m. Thank you.